Welcome back, everybody. Welcome back to the Road to Retirement. My name is Chris Anselmo of Brookside Tax and Financial Group. And again, we have Tony Shore from, it's not snowing there, but Minnesota. And
Right.
hey, our tribe is kicking your ass. So we're up in first place now. And then we have Tony Marlette from our office. So
Good morning.
yeah,
Minnesota is the home of the second place Twins.
Yeah, I can't call them the Indians, but
well, I wouldn't say kicking our butts. The last night's game, there was no pitching, and they won by one. It was 11-10. So, not exactly.
It's called a W.
Not exactly a stomping, though.
Yeah, but we're in a roll here. I mean,
you are. Yeah. You are. Yeah.
17-4 since Memorial Day. I heard this morning.
Okay. What's the name of the team again?
The Tribe. No, what? The Guardians.
The Guardians. Never heard of them. Anyway, go ahead.
So we were at the game the other day, and there was a something on the big board, and it said, "Can you name the all-time leading Guardians manager?" I'm like, well, it's got to be this guy because we've only had 20 games so far. I mean, so he's the all-time loser too. So today we thought we'd talk about what's a little bit about the economy, maybe combating inflation. Maybe that could be the title. We probably could all chime in on that. It's not really anything magical on our end as financial advisors. Maybe a few things what to do with your money right now, but I guess it all starts with gasoline. What do you think?
Go ahead, Tony.
I was going to say that's really kind of the domino effect with everything. I mean, oil and gas, it has a lot to do. It's not just filling up your car. It has a lot to do with energy, electricity, pretty much everything.
Well, the cost of products, because look, everything gets shipped, right? So even the the cost. My family's in the produce business forever, and my brother, he brings trucks in from California, and they used to be $15,000 to bring them in, and now they're $35,000 or whatever to bring them in. So that cost has to get pushed down to somebody, and ultimately it's us, right? So the consumer. So, so we're seeing that. I mean, you're not only seeing it at the pump, but the pump's affecting everything. It really. I mean, gasoline affects everything. So
yeah, I've made a decision. I'm going to ride a horse around all summer.
Well, Tony's got the electric car, right, Tony?
Because I'm going to ride a horse around because oats have to be cheaper than gas right now, right? I mean,
I pity the horse, though. You better get a Clydesdale.
Yeah. I'm going to need one with a strong back at this point, probably. No, I have a car that has the Volt has an electric engine, but it also has a 4-cylinder gas generator. So I did have to put it only has an 8-gallon tank, but I did have to fill it finally the first time in a couple of months. And ouch! But my wife drives an Equinox.
That's $100 fill up.
An SUV. The gas is crazy right now, and people are feeling it. And people I know have made decisions to not travel. So those types of decisions are what's going to send us into a recession.
And traveling's expensive. I mean, like we're going up to that event next month up in Park City, Utah.
Yeah.
So we're going to go on the way. We're going to go see our son who moved to Denver. So we're going to, and then so we're renting a car and we're going to go see some of the national parks because I've never seen them. It's $1,700 to rent the car for like 10 days.
Yep.
And that's not even including your gas.
Yeah, right. So it's getting crazy. And so, I mean, good news, bad news, no matter what side of the aisle you're on, everyone's feeling the pinch. So Democrat, Republican, or whatever.
We drove to Hilton Head last week and we explored flying. And I mean, the plane tickets were, 4 or 5 times more expensive than round trip gas. So, we filled up a few times. That was a few $100s at least. I drive a Maxima, so not a gas guzzler necessarily, but not an electric vehicle either. But you can just tell, you just know.
Yeah, my
and
daughter.
Actually, we're a little more expensive in Ohio than a lot of places.
Yeah, we're a little bit right around $5 a gallon right now. I think I saw it a little bit under this week. But I mean, my even for Father's Day, my daughter surprised me and drove in from Washington D.C. and she doesn't have a car, so she rented a car. So I ended up giving her like $500 or $600 just so she didn't have to pay for the car and the gas. But I was glad to see her. So what else? Price of food. I mean, so what are things we can do?
Well,
Just
I mean,
everybody shop at Costco and Sam's Club. I mean,
well, I mean, that is one way to go. You could always reduce expenses. We talked about carpooling. These anytime you talk about these kind of things, you always run the risk of sounding like your parents or your grandparents, right? Like, you don't need that expensive cell phone with unlimited data. You don't need, the Netflix and all of the streaming. Like, you can cut the cord on some of this stuff, but also, where we come in. Remember, this puts investors, long-term investors, in a compromising position too. People who don't want to take on extra risk when the market's going down. I had
Yeah.
this conversation with my dad on Father's Day. He's retired. He works a little bit part-time on the side, but he's kind of looking at the same thing right now, saying he's relatively aggressive for his age. He's 70, and he said, I don't want to go completely, into safety. I'll never beat inflation. Interest rates are going up, so bond prices are going down. So really where we come in, obviously we want to make sure if you're investing, we always talk about long term. That's the best way to diversify away from some of this.
Yeah.
And then thinking a little outside the box like we have, as far as not necessarily doing your typical 60-40 stock bond portfolio too.
Right.
That's just on the investment side of
So
things.
yeah, we've talked on other shows. Even though the banks' rates are going up a little bit, they're still well under inflation rates. So, sticking money in a bank might be safe, but you're losing purchasing power every year as your money's making maybe 1% now, maybe 1.5%, and inflation's 8%. So you're losing rate purchasing power there. So we have seen the insurance companies raise their rates on the products we called indexed annuities, which probably compliance officers not listening. So I mean, I treat them like I call them glorified CDs, but they're not bank products. They're not FDIC insured, so let's not go there. But they can get a better interest rate as the market goes up, but you have the safety that you're not in the market. So in the long
your
run,
principal's protected.
Yeah. So, I mean, if you really break it down to its basics, you're loaning the insurance company money, period, and they're paying you interest. And the interest, the rest of it is how the interest is calculated. So you're going to calculate interest based on stock market performance. But because it's really just a loan, you're not at risk that when the market goes down. The only risk you really have is the credit worthiness of the insurance company. So that's why you want to make sure we try to get high rated carriers. We don't want to use C and D carriers. So let's get high rated carriers. So we maybe help combat inflation there. But those are sometimes longer term products, and people don't want to be tied up that long. So recently there's been some buffered products. We call them buffered products. Don't want to use the word hedge because that's a whole different animal, but those give you some protection, maybe 9, 10, 15, 30% protection on the way down. And, but you'll get a higher rate of return potentially because the insurance company's not assuming all the risks. So some of those products are out there and they're short term. You could trade them. You could trade them every day. So.
Mm-hmm. Yeah, I mean, ultimately, you're just really exchanging one type of risk for another.
So, Mr. Shore, are you carpooling? Everyone hopping in that electric car? Or?
No, we're not. But my wife has a choice to not work from. She has quite a commute, so she's been working from home more because of gas prices.
Yeah, I haven't thought of that. I mean, I guess you could, with technology like we're using right now, you could work from home and talk to your clients, and they don't have to come into the office. So maybe more. We're using StreamYard right now, but there's also.
I'm at home. I'm in my home studio, so I don't have to drive at all today.
So there's various ones out there. There's Zoom. That's probably the big one we hear. I think Google has their own platform now, and this is This one's called StreamYard, but I'm sure Microsoft has theirs and things like that. So
Yeah, Teams. Yeah.
Teams,
So,
yep.
so it's a little easier to communicate with clients.
Yeah.
I like to be in person with them, but that's just
Yeah.
me maybe. So what else are you hearing from other advisors? What are they doing to combat inflation, if that's the topic, I guess?
Well, they're talking about, obviously, you mentioned they're talking a lot about, of course, fixed index annuities because really it protects you from losses with market volatility, but that's really more to protect against recession.
Right.
The rising inflation costs, they're really encouraging people not to tap into their retirement funds to get money to cover things, to just withhold big purchases. Now is not the time to go out and buy a new car or a new house. And the problem with telling people that is that affects the economy, which affects the market. It's a vicious cycle, as you guys know. And so they've talked about that. But people are just spending less. I mean, the first top key I'm hearing is, have a spending plan. Like go through your credit card statement or your bank statement and look at all the streaming services that you haven't used in a year or 6 months and cancel them. And I mean, little things like that. You always hear financial advisors say, if you just skip Starbucks every day, or that if you go to get a cup of coffee every day, that adds up for a year. Well, we're talking about bigger numbers, but people are cutting back. I mean, I think that the Fed raising the interest rate more and inflation, if it sticks for a while, I think we are going to see a recession.
Yeah, we haven't heard the word transitory in a while, huh?
Yeah, no, remember that? It's just transitory.
I was
it's
reading,
just temporary.
Yeah, I was reading this morning. They're actually it was from the White House. It was their press release or whatever. They're still blaming Putin for everything. Like, just say, wake up. It's our own fault. So,
well, they had to come out yesterday. They actually asked Jerome Powell point blank, was this going on before Russia, Ukraine? And he confirmed what everybody knew, and he said yes.
Like it happened as soon as he closed the pipelines. It happened.
So, well, I think it's more.
That's part of it.
Well, it's part of it. I mean, but don't you think the bigger part of it is? I mean, the oil thing. It's really it's the refineries, and there's so many factors that go into the oil issue. But the overall inflation issue isn't that. Aren't we seeing this big inflation overall because the government printed over $6 trillion worth of money? And anytime you print $6 trillion worth of money and throw it out into the economy to help boost the economy during COVID, what happened? You can't not have inflation, right?
Yeah.
I mean, you gave Americans $6 trillion. You pump $6 trillion into the economy. Do you think prices are going to go up? Do you think it's going to affect the value of the dollar? I mean,
absolutely. And all that led to was what was going to be more increased demand coming out of the pandemic anyway.
Sure.
Right. And they wanted people to spend money, right? Mm-hmm. So that to help the economy. So I don't know if that helped or hurt in the long. It was a short-term fix, but I'm not sure it was a long-term fix.
I don't hear anybody. I mean, this is my opinion. You guys tell me. I mean, you guys are more financial experts, but from my perspective and what I've seen, and what I know and what I'm hearing out there as well, is both sides. If you look at the politics of it, the Republicans and the Democrat talking points, the right wing and left wing talking points aren't actually correct. I disagree with a lot of what's being said about, it's Biden's fault for the oil, and I disagree with the left saying, oh, it's Ukraine's fault for the oil, and that's why we're seeing these rising prices, and oil affects everything. Oil does affect everything, but nobody's talking about this is what happens when you print money, when you put $6 trillion out. How many pesos does it take to buy a gallon of gas? Yeah, how many dollars now does it take to buy? I mean, that's what happened to the peso. You cannot put that much money within a year's 12-month 2-year period into the economy and not have exorbitant inflation, in my opinion, right?
Yeah.
And interest rates being so low, that affected a lot of things too.
Yes.
I mean, people went out and bought
Yeah,
houses.
money was free.
Yeah. They probably bought houses they probably wouldn't have normally bought or paid for, and I think they just overpaid because the same house that was worth $300,000 3 years ago, people are paying $500 $100,000 for them, and it's the same house. So it wasn't like you got more house. The people, I mean, at least in our area, I'm sure it's your areas too. I mean, people are selling houses within hours of putting them up. I mean, first of all, I'm like, where are all these people coming from?
Well, there's no for sale signs in our neighborhood.
It really has started to slow though, with interest rates going up. I mean, if you look at any pick your favorite online real estate website where you go to look for housing prices. Houses are starting to be on the market now. There's more inventory. You know, I see people like crazy dropping their prices down because they've been on the market for over a week now. And you know, even just 2 months ago, if your house was on the market for 3 days, you're doing something wrong.
Yeah. And cars too, right? We've had problems with getting cars, and cars are more expensive than they used to be. I mean, the money was cheap, so people would get 0% financing, 1% financing, and things. So I actually talked to a guy I know who his family's been in the auto business here in Cleveland for decades, and I said, I can't believe the auto industry let themselves get handcuffed like this with all the chips and this. He goes, "Are you kidding? We love this right now." I'm like, "What are you talking about?" He goes, "We're making more money than we've ever made. People are paying sticker or more, and we have no inventory to carry." They're loving this right now. I don't know, people need a car. They're going to buy a car, and repair places are probably loving it too, because people are probably trying to repair their cars instead of buying new ones. But a guy I was at breakfast with the other day said, look, it took him 6 weeks to get his car repaired because they couldn't get parts. I'm like, well, I don't know what parts has to do with chips, but everything's kind of backlogged. And
it is.
Luckily, like my wife's car's making some weird noise last night, so she's going to take it in. But we're fortunate; we have a third car, so she can use the other car. So, but some people aren't that fortunate to have an extra car.
It all goes back to COVID. I mean, the supply chain issues, and a lot of this was the shutdown because of COVID. And I just think if we hadn't had COVID, I don't think we would have these supply chain issues. I don't think we would have. We wouldn't have had the $6 trillion
shutdown. There were a lot of places that frankly had 2-year shutdowns that were probably not all that necessary. And I mean, I love the point about the $6 trillion. I think you're spot on about that.
Well, having the shutdown caused there's not enough inventory anymore, right? Because people weren't making the inventory. I mean, look what happened to the rental car industry. What happened there is, they needed cash, so they sold off all their cars.
Yep.
And now there's no cars. So, I mean, you're renting cars now at $100 a day when they used to be $25 a day.
Yeah.
So,
and I mean, if we're talking about, I think one thing, to combat some of this, we always talk to people about having enough savings. You want to make sure you have sufficient bank cash. But Chris, to your point, banks aren't paying any interest.
Right.
Don't keep too much cash on the sidelines. If you're working, I think a good general rule of thumb is 3 to 6 months worth of your expenses in a savings account. Any more than that, I know the market's rough, but this is, believe it or not, the time when you want to get in. You're not going to see the short-term net effects, but over the long term, even over the next, say, 6 months or a year, you'll be glad that money's not sitting in cash. You put it in the market, and that's your best chance to beat inflation with even your liquid savings. You want to have a cushion.
And people ask
anything more than that is.
People come and ask, where to put it in the market, and I'm a true believer. Just look, buy quality. I know everyone. Top 100, top 200 companies. I mean, if the Googles of the world and the Amazons of the world are having problems, everybody's having problems. So make sure you buy quality companies that have a history of paying good dividends. But to try and find the next, what's the next battery maker for electric cars? Those are out there, but those are longer term plays than people. I mean, our generation, maybe Tony is the other Tony. Long term meant 5-10 years. Now, long term, people think it's a year. So if they're not making money in a year, they want out. So if you're going to buy all these green energy companies, are the ones, there's some ETFs out there that just deal with lithium batteries and fuel cells and things like that. they don't move that fast because that technology is going to take time. You might be
Yeah.
getting in early, but it's good. I
But there's more
personally bought
risk.
some.
Your company might be the one, like a recent electric car company filed for bankruptcy because they couldn't
Right.
make it. So, you don't want to people try to look ahead and say, okay, I'm going to get ahead of this wave. I'm going to be the guy that invested in Apple before it was big. And, that's just, that's more luck than, hey, I see, you can see
Yeah.
trends,
But you have to be willing to hold on to it.
and you
right?
have to be willing to lose everything. I mean, how much are you willing to lose is the question you should ask
Right.
yourself as an investor, or if advisors ask you. It's not, oh, what kind of risk? No, how much are you willing to lose? How much money do you have, and how much of that money are you willing to lose? Because if you try timing the market or try to guess what's going to be big in the future, again, you need time for that market to grow, and you never know when it will hit or if it will hit. So,
Yes.
yeah, I like your advice of
And we do have clients that, we'll manage part of their portfolio. Maybe we're managing 80-90% of it. And they have another separate account that we don't manage. I'm like, here's your play money. You want to go pick the next hot stocks, go ahead. But you can't risk 80 or 90% of your money. If you want to risk 10-15%, maybe that's okay.
got to have money to live on in retirement.
So we do see people, trying to invest in green energy, but green energy, it's not overnight success. It's going to take years to, and if you're 60, 70 years old or older, it might be too late, right? I mean, that stock might take 10, 15 years to really see fruition. And like you're saying, if it could survive the onslaught of the other, you really want green energy, I believe, you got to let the auto industry in. Let the auto industry control it, and you'll get same thing with trains across the United States. You want it to happen, the auto industry's got to be part of it. They, maybe they own the train systems, but you can't say we're going to have trains and then eliminate automobiles, because the auto industry is just, they're too big and too powerful. They'll just fight. I mean, you've all heard the stories about, someone in the 70s made an engine that got 200 miles to a gallon. And then, the big auto industries just buy them up, give them a few $1 million and keep their patent in their file cabinet. So, yeah, you really got the big dollar industries. They got to be part of the solution, because we're not going to make the auto industry green on ourselves. You got to let them in on it. So
yeah, exactly. Good point. Well, I'll tell you, the economy is a little crazy. Looks like we're slipping into a recession, but now I think the solution is to have a plan and a strategy to moving forward, and work with a financial services professional like yourselves, Tony and Chris, and that way you have a plan in place. You can sleep well at night. You don't have to worry about the market going up and down, because you have a plan based on your own time horizon, right?
right, and
and I think that's a great point. I mean, we talk about ways to reduce risk and ways to beat inflation. Having a written plan and having it carried out, and actually having a living, breathing document, which financial planning is. It's not just asset allocation anymore. It's actually active, living, breathing documents, financial planning. Having that in place is a great way to not only help yourself sleep better at night, but it holds you accountable, provides you with a blueprint to say, okay, this is what I've talked about. This is what we've put into place. I'm not going to overreact. I'm going to let the process play out.
And if it's, a lot of other areas of your life, it's not in writing, it's just a wish or a dream. So if you don't put it in writing, you're not going to look at it. You're not going to see it every day. Not that you have to look at it every day, but it is comforting to say, look, we know we took this into account. It's going to happen. Inflation's going to happen. The markets are going to go up and down. I often tell my clients, look, when everything's rosy, you don't really need us that much. But it's times like this that you need a professional who does this every day, and not just, occasionally, like most people do, right? So again, Tony could probably put up our number, whatever. If you want to come in for a strategy session, we don't charge anything for the strategy session. We have a few books out there that you can read up on the topics, but
you can always flatter us and reference this podcast too.
yeah. Let's not get crazy, right? we have to figure out how to get people to see it, right? We should just send it out in an email to everyone. Is Erin listening? Erin's our marketing person. Maybe she can make this happen. So Tony, what are you doing for the 4th of July? Can't hear Tony
He's on
anymore.
mute.
Me? I'm going to a family reunion on my wife's side.
Okay, right. Okay.
In South Dakota. So in the middle of nowhere. So we'll see how that goes. But
so are you going to Park City?
I am not going to the big financial conference that you're attending in Park City. You have fun out there in Utah and have fun singing at the Mormon Tabernacle Choir. I know you're.
Some guys are going to Hawaii. There's another one. Some people are going to Hawaii, but it should be fun. I've never seen that side of the country, so I've been to California, but I haven't really been seeing anything between. No, I haven't really seen anything between like St. Louis and California, right? So
Park City is beautiful. Park City, Utah is it's a destination. You'll love it. Yeah.
Okay.
Yep.
All right. Well, I think we're about out of time. So, Tony, Mr. Short, you want to take us out?
All right. Well, that was The Road to Retirement with our hosts, Chris Anselmo and Tony Marlette. And tune in each week for the show. Thanks for listening.
All right. See you guys.
Thanks everyone.
Tony.